Real estate investing 101. 3 personas. Hey everyone, how do you make money investing in real estate? We're going to talk in this segment about the 3 ways, the all-encompassing 3 ways you make money in real estate. If you're just getting started, you need to watch this video all the way through and you need to learn about the 3 real estate investing personas, the 3 personas that a real estate investor must take into their strategy. If you already have rental properties, you likely could change the strategy in which you're using to invest after watching this video. I have taken the time to break out the 3 personas that I like to use to invest in real estate, and more specifically, how these strategies can help you avoid a down market or a recession. Because a lot of us are talking about the Canadian real estate market and how there could be a bit of a recession coming our way. So how do you invest in real estate? And how did I invest in real estate and buy, well over 30 properties now, and how do I protect myself and insulate myself against things like a recession? How do you make the most money you possibly can in real estate? Because at the end of the day, when I talk to you guys about how to maximize your returns, and that's what this video is about, we need to understand how do you actually invest in real estate. So let's get to it. Here we go. Number 1, Johnny Cash Flower. Number 2, you're an Annie Value Add Arbitrager. Number 3, you're a Suzy Speculator. There are 3 personas to make money in real estate. So the first, Johnny Cash Flower. Very simple. Let's go into the details. What is Johnny Cash Flower all about? Well, he's a real estate investor. It's all about the cash flow, all about that return on cash. Looking for a roughly 25% return on cash. Johnny Cash Flower doesn't look at all at appreciation. His sole entire mission, that persona is all about the cash flow. If you're buying properties that do not fit the Johnny Cash Flower perspective, you will get burned. Developers get burned because they don't buy for cash flow. Speculators get burned because they don't buy for cash flow. When I talk about cash flow, I'm talking about rental income. Whether you're using Airbnb, whether you're renting out standard residential leasing, short-term leasing, commercial leasing, whatever real estate that you're buying, you need to be focused on the cash flow. And so that is all your revenue at the top line, your rent's coming in. After all of your expenses, you have a net operating income. It needs to be positive. It needs to be significantly positive enough that you can get your down payment back in a minimum of 4 years. Without a refinance, without any appreciation, you need to have all of your down payment back in 4 years. That's the way the strategy works. Now, if you get appreciation, which you will, and your arbitrage, you should get your down payment back in like a year or less. In fact, this is how you get triple-digit investing returns when you're investing in real estate. The second one, and by the way, I like to put Johnny Cash Flow with the second persona, and that is the Annie Value Add Arbitrager. Annie Arbitrager, Annie's persona is all about buying undervalued, underutilized assets and then changing the use of that asset in a way that it creates value. So what are some of the ways you can create value in buying real estate with arbitrage? So arbitrage by definition means you're buying assets that are effectively undervalued and finding a way to arbitrage and close the gap and realize said value. So for instance, you might buy a single family house for $150,000 in London, Ontario. Now, it's bought at market value as a single family house. If you convert that to a duplex in the same area, often trading on a cap rate or an NOI and net operating income valuation, the property as a duplex with current market rents is worth, say, $250,000. And it costs you, say, $35,000 to make that conversion. So you're in it for $150,000 purchase price, $35,000 of value add renovations, you're in it for $185,000, and now it's worth $250,000. Annie Arbitrager created a ton of value. Now, Annie relies on the market being flat. She never bets on the market appreciating. In fact, if the market goes down, say 5%, Annie can still make money because 5% less of $250 does not crush her, right? We're talking $12,500, so it's still $237,500 purchase price. So in a down market, Annie still has a house worth $237,500 when she is finished because she did the comps and based everything on her analysis on how to create value in a flat market using current valuation metrics. In fact, she leaves enough room in her budget, enough room in her overall equation for things like a recession. So Annie's buying low, or she could be buying at market value, but adding value in some way, and adding value cheaper than the market expects. So a renovation the market might value said house renovation at $70,000, but Annie's able to deliver that renovation for $35,000 by managing cost control and managing labor and finding ways to do things in a more cost-efficient, purchase-optimized manner. So for instance, one of the greatest things I like to do when it comes to being an Annie Arbitrager is adding bedrooms, adding bathrooms. finishing unfinished basements, adding additions on properties, small changes like converting a property from a 3-bed, 1-bath to a 4-bed, 2-bath change the entire feel of the property and the valuation, as well as what you can get in rent. Oftentimes several $100s more a month in rent for one extra washroom, for instance, going from 1 to 2. So Annie's adding value, and there's 3 ways. She adds value through renovation, she adds value through marketing, and then through tenant placement. Those are the 3 ways you can really add value. So I've seen people buy properties privately and then market them really well, take really good pictures that are super crisp, wide angle lens, and get a really good agent to do a lot of marketing and get it out to the entire market, get full eyeball exposure on this property, and get more money by doing no renovation and changing nothing on the property. This is an arbitrage play. Now, it's harder to do this in times of recession, but if you're buying properties that are not marketed well, for instance, you go on MLS and you see descriptions that are, there's no dimensions on the house. The description says selling as is, 1 picture from Google Images on the front of the house. There's no pictures. This agent has done a very bad job marketing the property. And so, as an investor, you might be able to buy that and find an arbitrage play there to remarket and sell the property for more. The third thing is, like I said, the second point is actually our third point now, is tenant placement. Often bad tenants decrease the value of a property significantly. If you have a tenant there that's paying $500 a month in rent on rent control here in Ontario, and you can get that tenant out and the market rent is $1,200, and you now change the rent from $500 to $1,200, you've added theoretically $70,000 in value on that one play. And you might not even need to renovate. You might just need to change over the tenants that are there or convert the property's use so that an investor is more attracted by the numbers. So Annie Arbitrager, I like to do Johnny Cashflower, Annie Arbitrager. But I left it the third way that people invest. And this is the way people invest most often in major metropolitan markets like Toronto, Vancouver, New York, LA. They invest for appreciation. Now, I do not recommend this as your first or second way to bet on real estate, because basically what you're doing is betting. When you're a speculator, you're looking for, you're planning that the market is going to go up in the future. You believe buying this house at full market value today for $200,000, that someday in the future it will be worth $300,000. And likely it will. Likely real estate will continue to rise, and it has over the past, since the beginning of time, increased in value and mostly outpaced inflation. So what we know is that markets do appreciate, and speculators do make money. In the last 7 years, speculators have done so well because the markets in Toronto and Vancouver have exploded. And so the worst investors who don't buy for cash flow, who have no arbitrage angle, who add 0 value, they're making tons of money because they're leveraging up and they're speculating. Now, that's not a sustainable approach. That's not replicatable. So I'm not going to tell my audience, hey, you should be speculating. You should be buying markets that need gentrification. Now, if you can align all 3, why not? If you can buy for solid cash flow, you can get great tenants in there, you can arbitrage, and you could be in a market that you think is going to be gentrified. If you can speculate and be a Suzy speculator, power to you. But if you had to prioritize Johnny Cashflow, Annie Arbitrage, then become a Suzy speculator. And most people start the other way around. They say, if my property's breaking even, I'm okay. I know more prices are going to increase. That's the wrong way to invest in real estate. That is not the right way to maximize your returns and get those triple-digit returns you're really after, and insulate yourself in terms of, if you have a tenant destroy a property or a massive recession, or a lot of the risk factors associated with real estate. You can mitigate these by just insulating yourself with really good buying and value-adding techniques. So that's what I strongly recommend. I do believe that it's hard to be a Suzy speculator because even if you have the best of information, you cannot control what happens in a market. You can't control if they open a needle methadone clinic right beside your rental property 2 years from now. You can't control if a neighborhood becomes a bad area when it was a good one. You can't control if a bad area stays a bad area. And factors you thought were leading to gentrification of the neighborhood don't happen. A recession happens. Everyone loses their job in the neighborhood. Crime rates go up. Whatever, bad people move into the area, some houses get destroyed, then it becomes a rough street again. You can't control other houses, other properties in the area. I would rather be in control. The nice thing about real estate investing is that you're in control. If you're not going to be in control of your property and you're going to be gambling or speculating, you might as well just invest in the S&P 500. You might as well pick some companies and invest in other people's management, because at the end of the day, when you invest in publicly traded companies, you're betting on other people's performance. You're betting on employees, on management, on future speculation of commodities, or whether or not an idea is going to be successful upon execution. I don't like to gamble. I like to do sure things. And when I'm controlling, when it's my company, when it's my property, when I'm at the helm, I know that I can do everything to control the situation and ensure the best outcome possible. I can't ensure someone else is going to deliver the same sorts of results that I can deliver when I'm managing my own investment. So that's why I strongly do recommend the Johnny Cashflow and Annie Arbitrage sort of way of investing. Now, if you guys enjoyed this video, please let me know in the comments. Please like and share it on social media. I would really appreciate if you know someone else who's just getting invested in real estate and they don't know where to start. Send them my way. I do a live stream every single Wednesday at 7 p.m. for the Wise Wealth Show. I've done 16 episodes now, every single Wednesday without falter. I go on at 7 p.m. Eastern, 4 p.m. Pacific, and we just talk. 30 or 40 of us get on there and we chat about all the market trends related to real estate, personal finance, financial independence, retiring early, the lifestyle, everything. If you have a question about, should I contribute to my RRSP, or what are the tax implications of X and Y, I can give you a general opinion. Now, I'm not a professional, so don't hold me to it, but I will share with you, things that I think are happening in the real estate market. And I'll just basically give you free consulting. I kind of just share what's on my mind. I give you the update of what I've been up to for the week. So check that out. I really appreciate that. If you enjoyed this video, please leave me a comment, leave me a question, say, hey Mike, I've been doing the Johnny Cashflow and the Annie Arbitrage strategy in my market. I would love to explore a 25% cash on cash return. I would love to be able to pull my down payment out after a year, or with cash flow after 4 years. How do I get involved in these markets? Reach out to me, send me a message. As always, spend less, earn more, and maximize returns to unlock a wealthier you. Peace!